All right, everyone, let's do a quick market recap. So last week, one of the main events was around Tesla and Google, two of the Mega 7 companies. They reported their earnings. Now, Tesla did not meet the expectation. So basically, when companies report their earnings, there's the expected value, basically how much investors are expecting the company to make, and then there's the actual value. That's when the company actually comes in and report their earnings. And the main things we're looking for is the earnings per share and the revenue. Revenue is how much money they made, and earnings per share, how much would that be? Now, Tesla did not meet the expectation, of course, but there was some good news that came in the conference call after the earnings report. One was around Elon Musk himself mentioned that he's gonna spend less time at Doge in the government, spending more time, I think starting next month, May, with Tesla. So that is a good news. Investors got a little bit more confident on that. Second thing was around robotaxi. So they said the robotaxi will start, I think, in the trial version in Austin, Texas, and then starting next year, 2026, the mass production of robotaxi will hit. So that was again great news for Tesla. And then today, the transportation department said that they are working on a new framework around full autonomy or self-driving cars, which is a great news for Tesla. So those three main things happened around Tesla. So I think Tesla got really bullish, and only today I think they went another $25 a share, which is around 8, 9, or 10%. Second thing was Google. Google reported their earnings yesterday as well. They made a lot of money. They beat the expectation. So the expected value, both the earnings per share and revenue, they beat both. And of course, Waymo is another self-driving cars that Google owns. So the news around transportation department working on a new framework for self-autonomic vehicles. So Google is also getting a lot from that. So that was a good thing for Google. Now, the second thing is around the whole tension around the tariffs and trade war with China and Jeremy Powell and Trump tension. So everything eased off after those tweets from Trump that he no longer wants to fire. I mean, he doesn't have the intention of firing Jeremy Powell. And the tariffs between China, I think, were brought a little bit down. Also, there are talks around how they might come up with a good deal with tariffs with China. So everything around that brought the fear or the uncertainty in the stock market down. Now, when the fear and uncertainty is down, investors get more confident. They're going to put more money in the stock market. So those two things were the main things that happened last week. Now, for the next week, again, following the Mega 7, we have Meta, I believe Microsoft. Yeah, Microsoft, they have their earnings end of next week. And then following that, we have Apple, Amazon, and Nvidia. The rest of the Mega 7 companies will also report their earnings, which is, again, that's what we're going to look for. And I think that's what will give us some money. So that's that. Now, key takeaways. The key takeaway, I think, from last week in the stock market was around the fear indicator. So we have this thing in the stock market called fear indicator, or this actually can be gauged through an index called VIX. So whenever VIX is 15, you can actually go and check VIX. If you Google VIX, you can see it on Google everywhere, that what is the VIX number. So VIX of 15 means that the stock market is calm. Everything is very quiet. VIX between 15 to 25 means that things are a little bit choppy. Things are going like a little bit choppy up and down. 25 to 35 is fear. And 40 plus is panic. It's like panic. Now, last week was around 29 or 30-ish, I believe. So it meant that it was a little bit fearful. The week before, 2 weeks ago, it was panic. Right? The VIX hit, I think, above 50. That was around when all the tariffs and everything were introduced by President Trump. But this week, the fear came down. As of today, right now, it's sitting at 24, which basically means that it's still better than fear. So it's basically a little bit more choppy, but it's not as fearful as it was last week. Now, when VIX goes down, the number of VIX goes down, investors get more confident because they're like, okay, things are more certain. They put more money in the stock market. As a result, the whole market will go up. If VIX go up, becoming fear and becoming panic, investors become shaky. They don't they lose confidence in the stock market. So as a result of that, the whole market will go down. Now, that's the key takeaway. So that means that we no longer have that fear. The market is still a bit choppy. 24 is still choppy, but let's see how next week is going to play it out. Okay. All right. So I'll see you guys next week for another stock market recap. Thank you. Bye.